Yo guys, I hope you are having an amazing day, and in this video we're going to talk about daily bias. This is one of the most requested videos of all, so I'm really eager to share all the tips, tricks, secrets, everything you need to know. We're going to talk about previous days' highs and lows, previous weeks' highs and lows, about swing points, how to frame a narrative around it, and this is just everything you need to get your daily bias straight. Without further ado, let's dive in. First thing, what you need to determine when you want to find your daily bias is price more likely to get to previous day high or previous day low? It has a few options here. It can take the previous day high, it can take the previous day low, it can take both, or it can keep trading inside the range. But we're trying to frame our daily bias. So in this example, when we are in an uptrend, it's more likely that it's going to reach for previous day high, and when we're in a downtrend, it's more likely to trade into previous day low. Also, you can frame reversals around this framework with a up move and price takes previous day high, but it fails to displace above it. So it trades back into the range. So next day, we expect price to take previous day low, and it did. It's a reversal. Same here, it trades down. We expect it to take previous day low. It does, but it fails to displace below this low. And displacement is where the candle closes below the previous day low. It doesn't, it closes above the red line, and we see a reversal to the upside. With this in mind, we're going to watch some examples on the chart. When applying this framework to the chart, we go to check if price is more likely to go to the previous day high or previous day low. So on this day, we took out the previous day high and we trade into a daily fair value gap, and then we trade lower. That said, next day, we expect that it will take previous day low. It does take it like with a few pips and then trades higher. When it does that, when it doesn't displace below previous day low, we expect it to take previous day high the next day. It does and sells off. That said, we think price is quite indecisive, but we think price will go lower. And it does. And this places below this low, so we expect it to reach for previous day low again. It does, and then it's wicked up. This is a doji candle, indecisive candle. So here we are quite indecisive. So on the next day, on this Friday, you don't have a clear daily bias, but that's okay. This method is really, really nice to have, but it's not a 100% score. So I would favor when we're still in a downtrend, it closed with a down candle. I want it to reach to the previous day low, and it does. And this place is below it. It took some sell side liquidity here, so it's good to then displace above it. So again, quite tricky, but using this method, it displaced below. So again, we expect it to take previous day low. It does, and then displaces up. So in this day, it takes both. First, it takes the previous day low, then it takes the previous day high. This is the reversal we're talking about. So now, next day, we expect price to take previous day high. It does, and then it displaces lower. Okay, so next day, we expect it to take previous day low, and it does, and displaces below it. So the next day, expect it to trade below previous day low, and it does as well, and displaces below big time. So again, we expect it to trade to previous day low, and it does. A big wick, and then it fails to displace under this previous day low. So then what we have right here, this will be a high probability setup, is we have a daily fair value gap here, and we have seen price trades down, taking previous day low, but it fails to displace below it. So we expect a reversal into a daily fair value gap. So on this day, we're going to talk about it in a minute, but I would frame longs towards the daily fair value gap. Let's see next day, and it does big time with aggressive move. This is the sign, your signal that price wants to trade back upwards. And on this Monday, it does. Well, with this move in mind, we expect the next day to trade to the previous day high because it took previous day high and then displaced above it. So next day we expect to trade to the high as well. It does. It trades into this daily fair value gap inside the order block, and then it fails to displace up. So then again, the next day, we also created a daily fair value gap as well. Because it fails to displace higher, we expect it to take previous day low. And it doesn't, so here you see it's not a 100% score. So on this day, I would have framed shorts. We didn't have shorts, so in this day, you take a loss, and that's okay. We see a displacement upwards, so we expect price to trade previous day high. And it does, and then it finally takes out the fair value gap. So when you trade on this Wednesday, you with this framework in mind, if you would have traded this, you would have taken a loss, but you would get a really, really amazing short from there because the daily fair value gap was still in your back of your mind. Well, back to the framework. it trades above the daily high and then it sells off, taking the previous day low as well. So with this down candle, we expect it to get to the previous day low. It takes previous day low, then displaces up again. So now, and why we think the previous day high will be taken next day is because it takes the low, it fails to displace below it, and now we are aiming for previous day high. It does again. We're still at the previous day high bias. It does big time. We do it again. We still have this daily fair value gap in mind. It still displays above it. So again, the previous day high is in the charts. And again, it displays above the red line. So we're still aiming for the previous day high. And it takes it and then sells off. It fails to displace. So in this case, we frame a reversal here. And it takes it. So here you got 3 dojis in a row. So this is the consolidation days. And as you see, Friday and here Tuesday. So this will be a bank holiday. That's why you have this indecisive candles. That's why we always say don't trade bank holidays. Next to looking at previous day high and low, we should also look at previous week high and low. For example, here we have a Wednesday high of the week. And we sell off from Thursday and Friday. Friday we set the high of the week. And we see on Monday, it trades below previous week low, but it fails to displace under it. So this means we expect a reversal, and the reversal is towards the high of the week, previous week high of the week, and it does. Also, we can use the previous week high and low for a draw on liquidity. On Wednesday, we have the high of the week, it sells a big time on Thursday and Friday, leaving a fair value gap, and see on Monday, we trade it to the fair value gap and sell off towards the previous week low. When we take a look at an example, I've marked out the high of the previous week is on Tuesday, on Wednesday it traded down, Thursday it traded down, and on Friday it's at the low of the week. There's also a fair value gap right here where it trades into. And on Monday, it trades through the low of the week, and on Tuesday it displaces higher. And as we now know, where is the draw on liquidity there? We see a premium fair value gap and the previous week high, so our bias will be towards the upside. On Wednesday, we have an indecisive candle. Thursday, it trades to the fair value gap. And on Friday, it sets the high of the week. So we mark this out again. Friday, high of the week. And we got a Monday, low of the week. So we got a big range. And now let's check what does on Monday. It's still inside the previous week range. And it stays inside the previous week range. So now we're doing the high of the week. Previous high of the week is on Monday. And on Thursday, it was the low of the week. And you see on Monday, it takes previous week's low. It displays not under, but it's close above the previous week's high. So we expect a move to the upside. And that makes sense because we're in an uptrend. We have 2 previous week's highs resting here. So lots of liquidity and price trades to it. Next to looking at daily highs and lows or previous week's high and lows, the third and last thing we're going to look at is swing points. You can use swing points the same way you use the previous day or week high and lows. And if you don't know what a swing high or low is, please check out the video that's going to appear right now in the top right corner. It will help out a lot. So when we're going to mark out the swing points, why is this a swing high? It's because there is a lower high on the left and a lower high on the right of it. For example, right here, we have a swing low. And why is this swing low? It's because there's a higher low on the left and a higher low on the right. And if you look at price, we are in an uptrend, so we expect price to respect this fair value gap and reach for the swing high. And we want to monitor closely what price does when it reaches it. Respects, it trades to the swing high and it displays below. So now it indicates price would like to maybe want to reverse. So let's see what the next candle does. Again, it trades above this high, but it plays below. And then probably with news here, it wicks and then displays down big time. So now we have a bias because price wants to reverse from this swing point. What will be the likely draws on liquidity right here? Now we have our daily bias. We know, okay, price wants to reverse, trades back again, respects the old swing high. And also, if we're going to draw this out, this is probably going to be 50% of the wick. Yes, it respects it and then trades off. So where wants price to go? Where are the swing lows? I see a swing low right here. I see a swing low right here. I see a swing low right there. I see a swing low right here. And yes, this is on the daily, but you can do the same thing on the hourly, on the 4-hour, but we are using high time frame daily buys. That's the subject of this video. If you mark out these levels, here you see price trades below it and displays below it, and it trades to this daily fair value gap. And also inside this daily order block, you see the position right here, and then it trades off into this fair value gap, but it indicates we want to get lower. So these levels right here and right there, those are magnets for price. So we're going to fast forward, but now we have our daily buys in mind using the swing points. And with the knowledge we got from a few minutes earlier, with how price displaces above or below these levels, we can work from there. So let's use the previous day highs and lows again. Price wants to trade lower. It takes the previous day high and trades lower. So expect price to go lower. And we see here it takes a swing low. It displays below it. Now we see it took this swing low, but it displays above it like a doji candle. Quite indecisive, but it indicates price wants to first head to the high of the day. And it does. And after reaching the order block, and what do I mean with the order block? This one, again, guys, you cannot time this precision. If you want to know what order blocks are, watch the video as well. I will link it in the top right corner. It's also on the channel. This is the order block, and it's also in a really small fair value gap. You see how the body, like the wick, is touching the order block, but the body is respecting that mini fair value gap, and then price wants to trade lower again. Where would price wants to go? To these swing points. We touched this already, so we can delete these points. And what do we got left? We got this one below here. So see what price does. Trades a little back, and it comes to our swing low. We now have an understanding how to frame a daily bias toward previous days. Highs and lows, previous weeks, highs and lows, swing points. And now you have the skill sets to frame a narrative around this. So we just took out these swing low. Also, we trade into a daily fair value gap, and you see it not respecting it. So we're going to take lower arrays, and we see a swing low right here, and together with another daily fair value gap, and it's respecting the body. So if it's all in hindsight, guys, but I want to show you this example. It just traded towards this swing low and failed to displace below it. So now, next day, we expect it to trade above it. It doesn't yet, but we see another low taken, and now it displays up. So now we're going to expect it to take the high, and it does. And now what do we have for premium arrays? We have potential premium fair value gap. We also have a order block, the order block right here. And with this narrative, we're going to see what price does. So we got a big up day. So next day, we're going to expect the daily high to be taken as well. It does. It closes the range here and then trades upwards. So now again, we are expecting price to trade next day high. It does touch the fair value gap and it displays above the high. So now we expect another high day taken. It takes the high, but with a few points, it sweeps it and then displays lower. And we are inside the fair value gap, so it could be a reversal point. And because now displacing, we are aiming for the previous day low. And this day, it takes both. So it takes first previous day high, then it trades the previous day low. And because it's not displacing above the high and this down candle, the next day we expect a low of the day taken. And it does, but it's not displacing below it. Could be that we're going to trade higher again. Takes the high, but not displaces below it. So we expect previous day low to be taken. And it doesn't, but it does on the next day. So what do we see here? We had a shift in market structure. We're on a downtrend now. We respect a premium fair value gap. It respects the 50% of it. We have a reversal coming here. So where would price wants to trade next? What do we have next? We have a swing low right here. We have a swing low right there. We have lows right here. So there's lots of sell side liquidity to be taken. And look how price trades really aggressively to that. We cannot go lower than this because it's on the time the recording is the 28th of October. So we just took these swing points. So now we have a really interesting time, and I'm going to talk about it on the Twitter as well. We have potential quarterly shift coming up because on this day, maybe you're going to watch this like in a few months from now, but on this day, on Friday the 27th, ES and YM, so the Dow Jones and ES made a lower low. So what they did, they took the previous day low, they made a lower low, but NQ, Nasdaq did not. And ICT is teaching at the end of October, start of November, this will happen. It's called a quarterly shift. There's an SMT inside the indices. So one of them is not going to make a lower low, and that just happened. So now we're just going to see what's happening next. Little bonus here, but let's see how this plays out in time. Additionally to this is all higher time frame. There's going to be a second part about this video where I'm going to use these daily buys on a higher time frame using previous day highs and lows, previous weeks highs and lows, and the swing points in correlation with the PD arrays to frame a buys on the lower time frame. Because, for example, if you are expecting the low of day to be taken, how are you going to trade how we're going to execute on the lower time frames, on the 1 hour, on the 15 minutes, or the 5 minutes, or the 1 minute. We're going to talk about it in the next video. Thank you for watching this video. If you liked it, please like and subscribe, share it with all your trading friends. We're here to make killer traders. We're going to improve all together. And with that said, I see you in the next one.